Okay, hello everyone. Hello from London, and thank you for watching this webinar. Can central bank digital currencies help tackle poverty? I'm Ian Hall. I'm the editor of Global Government FinTech, a sister title to Global Government Forum. Both our publications report on innovation in the public sector to serve our core audience of public servants around the world. We're holding this webinar on the 7th of February 2023, with interest growing among governments worldwide in the possibilities of central bank digital currencies. CBDCs are, in fact, already live in a small number of territories. The Bahamas, for example, launched their sand dollar in 2020, and the following year, Eastern Caribbean nations began to roll out their own CBDC, Dcash. Other countries already live with CBDCs include Africa's most populous country, Nigeria. I'm delighted that we have representatives from both the Bahamas Central Bank in the form of Kimwood Mott and from the Eastern Caribbean Central Bank in the form of Charmin Powell for this webinar. They're joined on our three-strong panel by Scott Hendry from the Bank of Canada, which is among the many central banks treading more cautiously and yet to pull the trigger on the issuance of a digital currency. Other central banks in this group include the US Federal Reserve for a potential digital dollar, the European Central Bank for potential Eurozone digital euro, and the Bank of England for a potential digital pound. All these central banks are investigating, consulting, and in an increasing number of cases experimenting, but yet to issue a CBDC. Financial inclusion is often cited as one motivation to issue a CBDC. This is a reason typically given greater prominence in developing countries with relatively large unbanked populations. In contrast, interest in advanced economies in CBDC seems to be driven more by financial stability and payments efficiency considerations. Nonetheless, financial inclusion is a major challenge for all governments, as is recognised in many authorities' own CBDC documents. For example, the Bank of England's 5 core principles for CBDC include that financial inclusion should be a prominent consideration in a potential digital pounds design. More broadly, financial inclusion was included as one of 13 public policy principles for a retail CBDC published by the G7 in 2021. This Global Government FinTech webinar seeks to ask the following specific questions. How can CBDCs help authorities to help with financial inclusion? What challenges do authorities face in designing and using a CBDC to help with financial inclusion? What advantages and disadvantages do CBDCs offer compared to other government payment disbursement tools, such as cash and prepaid cards, and why? And finally, how important are CBDC design technology choices to realizing the potential benefits? We're going to begin with observations from Kimwood, Charmin, and Scott. We aim to save about half the time for discussions and questions. And thank you to those of you who've submitted questions to us in advance. So let's head over to the Bahamas and hear from Kimwood Mott, who is Project Manager for Digital Currency Implementation at the Central Bank of the Bahamas. So Kimwood, over to you.
Good morning, good afternoon, and good evening, everybody. On behalf of the Central Bank of the Bahamas, we'd like to thank you for this opportunity to share with you some of the many experiences that we've had rolling out our CBDC, the sand dollar. So I'm going to just take these first few moments before the discussion to just talk about what sand dollar is. And so if we can we go back to the previous screen? Thank you. And so sand dollar is basically a digital representation of the Bahamian dollar. It's no different than the physical bills and coins that sit inside your wallets or purses today. It's mobile phone-based technology. It also works with iPads and tablets, and there's little to no cost to operate. And this sort of ties in with the financial inclusion aspect. It's non-interest bearing because, again, we don't want it to be a disruptor to the current economic system and financial systems that we have in place today. We also can't speak about it without talking about what it is not, because there's a lot of confusion between CBDCs and cryptocurrencies. And it's not a cryptocurrency. While it uses some of the similar technology, this is actually backed by a centralized monetary authority, the central bank. So it is not a cryptocurrency. It is not a digital asset or commodity that can be traded on any form of exchange. It doesn't increase or reduce in value of any sorts. It's pegged to the Bahamian dollar. It's not a deposit account. It's not intended for persons to hold large lump sums inside those sand dollar wallets. And it's not for use outside the Bahamas, as it is Bahamian legal tender. Next slide, please. So we find ourselves in a changing financial landscape. Over the past decade or so, we've seen a huge reduction in commercial banks reducing their branches. We in the Bahamas, we are an archipelago, which is a large string of islands across the ocean. And so it's very difficult to move monies around. And by banks closing those branches in those family islands, it's becoming even more and more difficult for persons in those islands to operate. We've also seen a larger growth in the population of unbanked and underbanked individuals. There's been a huge reduction in access to basic financial services because of the removal of these brick and mortar banks in those far-flung islands. And there's also been a difficulty establishing electronic merchant services. So even as we move and a lot of places are going cashless, if there's no way to actually establish electronic merchant services, it even, again, excludes a certain demographic out of the way of being able to operate in the economy. A lot of persons look at online banking, but it's not a suitable alternative for commerce itself. There's been difficulty in movement of cash for commerce. Again, I talk about the fact that we're an archipelago, so it's very expensive, and there's a lot of security concerns with moving large sums of cash across the waters, as well as there's limited access to cashless transactions. And of course, with most electronic forms of payments that exist today, there seems to be an increasing rate of transaction fees. Next slide, please. So a bit of history about the sand dollar. In 2003, the Payment System Modernization Initiative began under the direction of the National Payment Council. The NPC is made up of just about every facet of our economic system. That's insurance companies, commercial banks, credit unions, payment service providers, money transmission businesses, and the like. I'm headed by the Central Bank of the Bahamas. And so in 2016, the Central Bank of the Bahamas began its initial research into the CBDC. 2 years later, in 2018, the Sand Dollar project was initiated. In 2019, we began our pilot in the Exumas. The Exumas was chosen because it is a microcosm of the Bahamas. It itself has a capital surrounded by many smaller islands and keys, the same way the entire Bahamas has a capital made up of many other smaller islands and keys. So it was a really good use case for us to see exactly how a CBDC could function. And again, with it being a family island, one of the more developed family islands, it sort of mimicked the overall microcosm of the Bahamas itself. And in 2020, October of 2020, we had our official launch of the Sand Dollar nationwide. And again, we did all of this, both the pilot as well as the launch, while trying to deal with the COVID pandemic. So that was very challenging. Next slide, please. So I mentioned the Payment System Modernization Initiative, and that initiative was geared at primarily financial inclusion, making the payment systems more efficient and more cost effective, creating a greater access to financial services, easy access to cashless transactions. The Sand Dollar operates on the basic cell phones that are offered by most telephone companies today, so there's no need to buy additional point-of-sale systems in order to have electronic transactions. One of the key factors of this is the non-discriminatory access. When we think about Sand Dollar, we think about cash. We talk about the fact that it is the same as cash. It operates just like cash. There is no discrimination with cash. So a child, a visitor, a non-documented migrant, they all operate in a space where cash can be traded for goods and services. And so therefore we made sure that the Sand Dollar itself had no discrimination against, once you have that mobile device and can find at least the minimal amount of KYC, you should have access to the Sand Dollar the same way you have access to cash. And again, some of the benefits that come out of that also is defense against money laundering and counterfeiting. Next slide, please. And so some of the early challenges that we faced in our rollout all came around, of course, COVID-19. That was, I think everybody had a huge challenge with that in the financial services industry, but trying to actually roll out a pilot and going into production with a novel technology such as this, are very daunting because it was a very touch and feel type scenario. There's also education and trust. This is something that is very new. Most persons, again, the confusion that comes in with the cryptocurrency and the crypto space also created some sort of, pushback against what persons were willing to do, trying to see if we're going to operate in electronic money space with digital money as opposed to electronic transactions, because there is a slight difference. Again, the central bank itself does not offer the sand dollar to its customers. We do have intermediaries that offer the sand dollar. So there's direct API integration and development by those AFIs. In some instances, those developments were slow and some did not meet up to the standards of the central bank. And so therefore they weren't allowed to launch. But for those that were able to complete in a timely fashion, we have seen great movement in those areas. Even still, because the central bank during the pilot, before the other AFIs or authorized financial institutions had the opportunity to develop those API integrations, the central bank released our own application for persons to get at least the look, feel, and experience of sand dollar. And that application was considered basically a competitor, even though we ourselves were not onboarding individuals. But there is this perceived notion that the regulator is in the same space as the businesses that they regulate. And of course, no one can do it better than the regulator. So therefore, they feel this competitive, that we have a competitive edge. But we're doing our best to dispel this notion and to allow the authorized financial institutions to step up a bit more. Of course, we've been constantly monitoring the space and trying to adjust our regulation and policies to create a level of standardization that comes in when persons start to look from one wallet service provider to the other, and to make sure that what we want to achieve isn't tainted or destructed by all of the different varying methods by which these wallets may actually integrate with the sand dollar space. So that level of standardization needs to be put in the actual regulations and policies, so we have some control, even though it's a free market space. And of course, offline solutions is something that was something that we had to address. Understanding, of course, we live in a hurricane belt, and there are times where communications may actually go down, and you still need, again, the CBDC is one that we also look to as something that can be used for national security purposes and social services as well after a national natural disaster. Next slide, please. And so some of our early keys to success, again, legislation. It's very important that you put significant legislation in place that actually gives the CBDC the legal backing that it needs. The Central Bank Act of 2020 was amended to make the sand dollar legal tender, and by that definition, allowed it to actually do certain things in the economy, allow the central bank to dictate the way certain individuals in the space are allowed to operate. And of course, the other two legislations, the Bahamian Dollar Digital Currency Regulations 2021 and the Payments Systems Amendment in 2021 as well, also spoke directly to digital payments and the electronic space. It defined the players in that space, and it also gave a bit of control and some customer protection for persons that operate in the digital wallet environment. And so those were things that didn't exist in the original state of legislation, but now we've actually put the legislation in place so that that is now defined by law. Interoperability, which basically is a fancy word to say that it works with everything. So we had to make sure that all of the different wallet providers were able to integrate into the sand dollar space, as well as for persons to be able to transfer funds from one wallet to the next, regardless of whether or not the wallets were of the same proprietary architecture or even competing. We've also looked at financial system integration, making sure that you can actually convert, again, trying to operate in a digital space, doing all things digital, linking the automated clearinghouse, which is ACH, so persons can move funds directly from their commercial bank accounts into their sand dollar wallets. And if they had an excess of funds in their sand dollar wallets, can do the same and revert and transfer those funds directly back to their commercial bank. And the same goes for the real-time gross settlement system, which is operated by those authorized financial institutions in the space to be able to do wholesale transactions in the sand dollar environment. And so that is where we are today in the Bahamas with our rollout of the central bank digital currency, the sand dollar. Thank you very much. And I turn it over to our moderator.
Thanks, Kinwood. That's thank you for telling the sand dollars story so far. Just kind of three quick reactions. It's interesting you refer it's part of the backstory, I guess, on legislation, because I think there was I think it was either the Bank for International Settlements did a survey results revealed a few months ago that said I think it was either 20 or 40%. I think it might have even been as high as 40% of nations that were looking to introduce a CBDC. It was either hadn't thought of the legislation or certainly hadn't made much progress in preparing the legislation. So, so obviously it isn't given particularly great extensive coverage, but it's an important a crucial factor to actually launching a CBDC. Interesting as well, you mentioned at the start the actual growing population of kind of unbanked and underbanked people in the Bahamas as well, partly caused by the decline in kind of in branches as well. I think we'll potentially come on to that later, because obviously one of the motivations for launching a CBDC and is to help in that regard. So it's interesting that you said kind of it's a growing issue in the Bahamas. And then thirdly, you referred to the Bahamas being in the hurricane belt, and that kind of takes us, I think, neatly onto Charmin in the Eastern Caribbean Central Bank, because I recall a couple of years ago when writing about the project she's about to describe, Dcash, if I remember rightly, one of the motivations was helping recover from a volcanic eruption in the Eastern Caribbean. So it's kind of bringing kind of natural elements into the discussion as well. So right, we will come back to you, Kinwood, in the second half of questions, but thank you for that. And let's go to the Eastern Caribbean and over to Charmin, who is the Chief Risk Officer in the Office of Corporate Strategy and Risk Management, but also chairperson of the FinTech Working Group at the Eastern Caribbean Central Bank. And I know has been very closely involved with Dcash. So Charmin, over to you.
Thanks, Ian, and good morning, good afternoon, good evening to all. I do welcome the opportunity to share with you in terms of our Dcash project, or CBDC Dcash project here at the Central Bank. So next slide. In terms of the presentation today, so the areas I will be looking at, why a CBDC, why would central banks even consider issuing a CBDC, looking at some of our objectives in actually issuing Dcash in the Eastern Caribbean. Then I'll move on to CBDCs and poverty. How can it help? And based on our experience to date, and then just have some concluding statements. So next slide. In terms of why a CBDC, one of the reasons, the main motivation behind CBDC, recognize globally that digital payments are becoming the order of the day, I think. And that was even more pronounced during COVID, where a number of businesses moved towards digital platforms, and the whole idea of digital payments became more prevalent as movements were restricted, and it was recognized that there needed to be methods where people can still transact, people can still move funds despite the restrictions. So digital payments becoming the order of the day. For central banks to remain relevant, then they need to be able to have cash available in a digital form. And secondly, a central bank digital currency provides the convenience of digital payments alongside the comfort of traditional money. We do know how persons resist change. Persons are accustomed to having their banknotes and coins in their wallets, and therefore, by issuing a central bank digital currency, persons have that convenience of being able to transact digitally, but knowing that it's the same as what they have in their wallet. So that comfort, that familiarity helps in terms of achieving that objective. And thirdly, persons have access to legal tender when cash may not be readily available. So we do know that for CBDCs, in our case, we would have made sure that we adjusted our legislation to make sure that Dcash was legal tender. And so therefore, there may be instances, and Kim spoke about us being in the hurricane belt. We too are in the hurricane belt. And therefore, there may be times where physical cash is not available. However, having that legal tender, you're able to still transact, even though you're not able to get physical cash. And we saw that when we had the volcanic eruption in St. Vincent and the Grenadines, one of our islands, where persons weren't able to get to the capital in some instances to access their funds via ATMs, etc. But if you have a central bank digital currency, in our case, Dcash, then you can still continue to transact despite the fact that physical access may not be available. And so therefore, these are some of the motivations behind why a central bank would consider issuing a digital currency. Next slide, please. Oh, well, sorry. Okay. The last point I was going to make is about the cost and security. We do recognize that moving cash is expensive. Minting and printing banknotes and coins is expensive. We have the whole issue of the cost of printing and minting, the cost of transportation, the insurance costs. And in our case, although we don't have as many islands as the Bahamas, we have 8 countries in the ECCU. So we have to make sure we get cash to all those 8 countries. And so that in itself is a cost. And so therefore, having CBDC reduces that cost. But there are also other security concerns associated with the currency. You have physical cash, you know, the people rob, steal. And so when you have to move large amounts of cash, even for the central bank, like a security concern, and even for the public in transacting in physical cash, that too becomes a concern. And so therefore, by having the legal tender in digital form, it reduces that risk of the security risk, but also reduces the cost to the central bank. Next slide, please. So why Dcash? What was the motivation behind the ECCB issuing Dcash? Firstly, and importantly, payment system efficiency. One of the challenges that we noted in terms of persons transacting prior to the introduction of Dcash was the whole issue of cost, speed, security. Bank fees are high. They are high. And so even moving funds within the countries, across countries in the ECCU, even within a country in the ECCU, was relatively high. And so persons were deterred from making those transfers because of the high cost of these transfers. And also the settlement speed. In some instances, it took 2 to 3 days for transfer to be effected. And persons pay by check. It can take up to 5 days in some instances for check to be cleared. And so in that case, persons were frustrated. And so the inefficiencies that exist in the payment system was one of the motivations behind us issuing a CBDC. And so also in terms of moving funds from one ECCU country to the other, that was also another motivation because we have persons moving across the islands. For example, here at the ECCB, at the headquarters in St. Kitts, we have a number of staff members from all the other 7 islands. And so they very often need to move funds back home for different reasons. And so it has been a challenge for them to even move funds easily. And so to improve that those cross-border transactions in the ECCU, we figured there needed to be a solution that would help that would be less costly to individuals. And ultimately, we have a target of a 50% reduction in the use of cash by 2025. It's a very ambitious target, but given the benefits of a digital currency, we have set ourselves that target of 50% reduction in the use of cash. And we're hoping that Dcash can help us to achieve that. Then, of course, there is the objective of financial inclusion. While we may not have a large population of unbanked persons, we have a large population of underbanked persons. So persons may have accounts at commercial banks and credit unions. However, because of the cost of doing business, because of some of the requirements, they are unable to participate fully for all the financial services that are available. So they may want to participate or we want to transact digitally, but because of the restrictions, they're not able to do that. And so Dcash offers that because we have an alternative where persons who may not meet the requirements for financial services from a commercial bank, credit union, etc., they can in fact do it via Dcash. So they can be part of that digital transformation that we're pushing toward, even though they may not be able to do it through a financial institution. And also we are hoping that through the use of Dcash, you can have new types of financial services being offered. So commercial banks, credit unions can expand using the Dcash platform and offer new services, additional services that can benefit the population as a whole. And then thirdly, the whole building out of digital economy and enhancing competitiveness, which will ultimately lead to economic growth for the region. We can see, we see it already coming out of COVID, and the digital marketplace is expanding. And therefore, Dcash offers that platform, that payment platform that can facilitate these initiatives. And so ultimately, we expect that by having a digital payment platform, which stems on our legal tender, the easy currency, we will be able to see that build out of the economy and have ultimate economic growth. Next slide, please. So to answer the question, can CBDCs help in alleviating poverty? And there are certain key aspects that need to be borne in mind that we have seen from our pilot so far that must be looked at in terms of whether or not the CBDC is going to in fact help in this way. Firstly, it's design features. Your CBDC has to be designed in such a manner that it helps persons, it works. It cannot be complicated. It must be easy to use. So therefore, at the start, when the CBDC is being designed, it must be designed with these objectives in mind. It cannot be designed in a vacuum. When looking at the CBDC design, the features must be such that it benefits the end user. It benefits the persons who are going to be using it, the individuals, the businesses, the financial institutions, all the key stakeholders. Those design features must be such to benefit them if it is going to meet the objective in the long run. Next, the ease of use. For any CBDC to be successful, it must be easy to use. The person who is least IT literate must be able to find easy to use, because if you're going to look at poverty, usually the persons who are in that category are not the ones who are tech savvy. Therefore, we need to be making sure even the smallest child, since we want to reach the whole spectrum, it must be able to be easy to use. Persons must have that, they should be able to pick up their device and use it. Another area that must be looked at is the whole issue. Next, availability. If a CBDC is to be useful, it must be readily available. And for our design for the Dcash, we have two options where CBDCs can be available to persons who already have bank accounts or those who don't. So therefore, it covers the entire spectrum. So the availability, and then once you have signed on for Dcash, you must be able to easily access that Dcash in your wallet to be able to spend it. So that availability and ease of access is very important if CBDCs aren't addressed the whole issue of poverty. Next, the other area is a cost. Now for us, for Dcash, for the purpose of the pilot, we have had is of no cost to use Dcash. So none of the stakeholders, none of the ecosystem partners have a cost to using Dcash. Now the question has come up very often as to whether or not post-pilot there will be a cost. Now what we have said is that the ECB has taken on the initiative to bear the infrastructure costs of Dcash. Therefore, what we expect post-pilot is that if there is a cost associated with Dcash, it will be minimal when compared to current financial services costs, because normally when financial institutions actually charge for their financial services, it's usually to recoup a cost that they would have put up front. Where their cost now is minimal or non-existent, they should not. So we will be working with our partners to ensure that there is not any burdensome cost to the end users for Dcash post-pilot. And finally, in terms of the use cases, you must be able to have sufficient use cases of persons to the benefits of using the Dcash. So you must be able to, because Dcash is a retail CBDC, you must be able to use it for your groceries, your medication, your bakery products, your gasoline. It must meet these basic needs because it's your disposable income. And therefore, for persons to be encouraged to use it, there must be sufficient use cases out there that they can see the benefit of having it. Next slide, please. So in concluding, what we would say is that the CBDCs have the potential to provide opportunity. And we have seen it with our Dcash, because as we go through the pilot, and we had similar challenges Bahamas had in terms of COVID, in terms of making sure we have all the legislation in place, etc. So we have seen the potential for CBDCs that it can provide the opportunities to reduce the whole idea of poverty. For example, the areas we're looking at in terms of governments making benefit payments or welfare payments. A lot of our islands are still very cash-centric. And so sometimes it's very difficult when they have these benefits to pay to reach persons with the cash. It's a risk in itself. With a CBDC, you bridge that gap. So persons, they don't have to leave their homes, they can get the funding. And you can reach persons you probably wouldn't have reached originally. So there are the benefits. However, the design features are important. It has to be easy to use. The CBDC must be accessible. And one of the things that are very important is public education. Persons understand it. We've seen that persons, we had the whole issue of, as well, of differentiating this central bank digital currency and cryptocurrency. So we had that challenge. We still have that challenge. It's a continuing conversation. But we must ensure that we do the relevant public education and awareness and ensure that as we design the CBDC, even as we improve it going along, that the features are such that it can in fact reach all and sundry in the population. And finally, in terms of, next point please, central banks have to make a deliberate effort to build use cases for CBDC to be efficient in alleviating poverty. If we are to if we are to meet our objectives, we cannot just sit back and say, okay, we hope it does it. You have to deliberately in your design, deliberately in your development, develop the use cases that make it beneficial to all. So thank you very much.
Thank you, Charmin. Really interesting. I'm sure that a lot of the questions that we'll get onto are really focused on, you know, kind of what those design features are, things like offline functionality and the kind of type of phones that will work with CBDCs, which will come onto kind of later on. Interesting point again about the importance of kind of promotion, if I can call it that way, and differentiating in people's minds the difference between a CBDC and cryptocurrencies, because I think it's obviously generally, I guess that certainly the panel here very much know the difference, but I think for those who the vast majority of the population who don't work in the industry, they're going to hear about a CBDC and tied in with cryptocurrencies, which could be positive for some, but could be negative for others. I think that's probably a whole different webinar actually, which is kind of the kind of sharing advice between central banks and public authorities on almost how best to promote a CBDC if that route is taken. So thank you for that, and look forward to coming back for questions. So on that note, over to Ottawa in Canada, where we're going to hear from Scott, who is the Senior Special Director of Financial Technology in the Bank of Canada's Banking and Payments Department. So Scott, over to you.
Thank you very much, Ian. So I'd like to thank our hosts for the invitation to speak to you here today. And I'll start with the disclaimer that anything I do say today is my own opinion and not necessarily that of the Bank of Canada's. So when we look at the environment in Canada, we don't see a current need for CBDC today. However, when we look to the future and the trends that the Canadian economy is experiencing, we do see a number of possibilities that would potentially lead us to making a decision to issue a CBDC in the future. And that's the reason why we are continuing in our research from both an economic and a technical perspective to prepare for the possibility that we will be issuing a CBDC at some time in the near to medium term or indefinite future. So we're doing contingency planning, preparing for the future. The two scenarios that we see are primarily around the possibility of a cashless economy, as well as the possibility of the widespread usage of alternative digital currencies. So with the first scenario, Canada sees a declining use of cash at point of sale, and this trend has been continuing for some time. And if it continues into the future, we see the possibility of a cashless economy where people can't access central bank money, and that there could be some significant hardship that comes from this, particularly in the context of today's discussion when you talk about poverty, because some of the last people that use cash could easily be the poorest amongst us. So we need to make sure that that something is available to these this wide population, and especially the full Canadian population. So we'll never abandon the issuance of cash. We will supply it for as long as people want it. The second scenario is much less likely, but in many ways more disastrous, which would be if people stopped using the Canadian dollar and started using something else, whether that be Bitcoin or a stable coin or a foreign central bank digital currency. We need Canadians to use the Canadian dollar to be able to do monetary policy and protect monetary sovereignty. So those are the two scenarios that we think of most, but there could be others. And it's interesting that the details of those trends were quite different from what was mentioned earlier in the Bahamas and the ECCB, but the outcome is still the same, that there's a belief in a benefit and need for central bank money to be accessible by everyone. So that's really what it comes down to in the end, is the belief in the value of a retail public money, and a retail public money that is beneficial and useful. So as was mentioned through the discussion so far, is we need to make sure that whatever we put forward as a CBDC is actually usable in a wide range of circumstances, and that it's something that people actually want. So it's some of the primary motivations that we talk about are that notion of universal access, that everyone has the right of access to central bank money, and that this is beneficial for the economy in terms of it being the safest form of payments, and it promoting financial stability, monetary stability, the uniformity of money in its different forms, to link the various parts of the payment sector, so that we have one type of money and one uniform currency. But there's other benefits in terms of, as I mentioned, monetary sovereignty, resilience of the payment system, improved competition. There are others, but those would tend to be what we would think about the most. But for today's discussion, it really comes down to what we think of in terms of universal access. We don't generally word it in terms of financial inclusion. The Canadian population is very well banked, but it's about 99% banked, but there's a more sizable underbanked population. So there are many people who have a bank account, but they don't really use it to its fullest extent for various reasons. Sometimes around access, a lot of the time around costs. So we think there's a need for universal access to central bank money. If you're going to put out something like cash, it used to be usable by everyone, or used by everyone, and it still is usable by everyone. And we need to make sure that environment continues in the future. And this has many different aspects to it. That could mean for the rich and the poor, it means for the urban and the rural, it means for the fully connected online as well as the unconnected offline, whether you have access to electricity or not, and whether you have some type of disability or not. So all of these different access issues need to be dealt with if you're going to build a money that is usable by everyone. So we've got quite a number of projects investigating different parts of this to make sure that if we put out a CBDC, it's something that everyone could use. Now that doesn't necessarily mean that it's all available day one, but it is the goal towards which we would have to build. So I don't necessarily view CBDC as a tool for directly addressing poverty. It's a tool for, as we mentioned, inclusion, or especially to make sure that digital exclusion doesn't get promoted as the economy moves more and more digital. And we don't want to be part of that. If our only product is physical banknotes, then we are not going to be promoting digital inclusion. So we need to, I think, move with the times and make sure that this access to public money, which is beneficial, does continue in the future. And whether that environment is physical or digital online. So I think as the economy becomes more and more digital, we need to make sure that people can participate in that everyone can participate in that. So those people that are using mostly central bank money now, I think it's incumbent on us to evolve our product so that it can be part of the future as opposed to just decline over time. So we don't have, as Sharman mentioned, a goal of reducing cash usage. That's happening quite naturally in Canada. But we will promote the usage of cash where we're trying to improve the distribution and production system as much as we can. But we see a future where cash might not be available anymore, might not be demanded anymore. So we're thinking about how to prepare for that and what the implications are. So a CBDC is just one of many policies that a government requires to deal with financial inclusion and poverty. It would not be the only thing, but it could be something that's very beneficial to help certain groups, especially, to be part of this digital future. And the government and the central bank is probably the only institution that is going to have this very wide public policy goal, that making sure that everybody has access to good, efficient, low cost digital payments in the future. The private sector has its role to play. They have the end user relationship in many cases, but they have different motivations. It's the central bank and the government that has the motivation to make sure everybody's part of this this vision of the future. And we all need to work together to try and build that. And I think I will stop there. Thank you.
Great, thanks, Scott. Really interesting. And as I said at the start, I think the Bank of Canada's position, is typical of broadly typical of everywhere from the US to the Eurozone to the UK. Actually, an interesting day here in the UK, because today was the day that the consultation on a potential digital pound was finally released here in the UK. Scott, I just want to pick you up on one, and it's kind of the same question for all of you, but it was, I think you said that 99% of Canadians are banked, and I suppose a really kind of tough question to start with, I suppose, but it would apply in principle to all, is to what extent are discussions on CBDC, that you've heard, that you've been involved in, trying to take into account that 1%? If that question makes sense, are those discussions happening when and are the technologies and everything else that's required available or potentially available to reach the top, I guess the toughest to reach 1%. So Scott, if I can already come back to you on, that's quite a tough question, I admit, to start with, probably.
Yeah, a lot of our research is trying to figure out first who those last 1% would be, or the larger population of the underbanked, and what the issues are driving that unbanked nature, so that a CBDC could be designed to try and address those frictions. So we do quite a bit in terms of surveys to try and identify payment trends, and that includes with this last 1%. We want to understand all the payment trends and all the demographics that people are experiencing. And with the unbanked, it's generally to do with costs. So the banks do supply some low-cost bank accounts, but even those are potentially too costly in some circumstances. And the other part is about access. As was mentioned, banks are consolidating their branches in the areas where there's the most customers. And we have a lot of remote territory in Canada. So there are areas that are becoming less banked. And that branch access is an issue. You could say that it's not as much of an issue in a digital world. People just go online. Well, those are also the areas where there's access problems for online. Much of Canada is covered by satellite access to the internet, but that's expensive. So again, it's an issue. So we really are putting a lot of effort into the idea of universal access, no matter who you are. So anytime, anywhere, anyone gets access. And that's our goal, our thinking. So we've got a bunch of research around different types of disabilities and what those issues mean for people accessing. And then offline payments is a big part of our research, trying to figure out how to do it in a way that's secure and very usable and convenient. There's a lot of territory that suffers problems with access. And even in urban Canada, there's the same natural disaster issues that could arise that cause problems. Even here in Ottawa, there's been outages of electricity for up to a week within the last couple of years due to various types of storms. So there's the possibility of a need for offline access by anyone. So yeah, it's a big part of our goal.
Thanks, Scott. And before I do come to Charmin and Kinwood on kind of that same question, I'm aware that the Bank of Canada has done, talked about a dedicated universal access device, which I think takes what you were just saying, and kind of the next step is to say, actually, is that it sounds like it's, as a device, it sounds like a technical solution to get to that final 1%, but I probably misinterpret what it is. But what's that?
Well, it's a theoretical concept at this point. It's not something that we've actually built, but we've done some design work to investigate various possibilities. Basically, the idea is not everybody has a smartphone. They don't have access to it, or they might not be able to afford it. There's other types of phones, so we would have to figure out how a CBDC could work with those, but not even everybody has those. So we need to figure out how everyone could possibly access. And you can design a specialized device that holds a battery a lot longer than a cell phone can, because it's dedicated to just doing payments. So it could be offline for a very extended period, much longer than a cell phone could. So it's potentially a better construct for something like offline payments. And you could design them to be very small, or you could to be larger depending on the particular need. We've looked at various ways of connecting prepaid cards or cards to specialized devices for making different types of offline payments. So there's quite a different number of possibilities, and they could have different designs to serve different populations. But yeah, specialized devices could be one way to try and reach the whole population.
Thanks, guys. It's really interesting, and it's actually, I think it's one of the most interesting areas of CBDC, and I also think it's not typically given, such great prominence, because the discussion tends to be about this kind of global race to who's first, who's second, who's introducing a CBDC this week, and I think those technological challenges that can potentially deliver on one of, we've heard from all of you that financial inclusion is one of the goals of a CBDC, is a really interesting and obviously still developing area. Shall I go to Charmin then to pick up on that? I think the question from me started out with, if there's a kind of percentage of, a statistic on the kind of the population of the Eastern Caribbean, the 8 islands that are banked, and then the extent to which, there is a technical and solution to reach. In Canada, it's 1%. So whatever the percentage is in your islands.
Okay, so thanks, Dion. Well, currently we're actually in the process of collecting data as to the precise number of banked and unbanked. However, we have anecdotal information that suggests that whereas we wouldn't have a large unbanked population, we have a large underbanked population. And that is what went into our design, where we have a value-based wallet. And what that value-based wallet is for Dcash is a wallet that does not require you to have a bank account or an account with any financial institution to be able to access Dcash. So the limits on those wallets are significantly lower because of the fact that the KYC and the whole issue of anti-money laundering and countering financial terrorism. We look at those limits for those. So because the risk is higher, you haven't gone through the financial system to have that screening. The wallet limits are lower. However, it allows persons who don't currently have a bank account to be able to access Dcash. We use non-bank licensed institutions to do the onboarding for those customers. And the KYC information requirement is lower. Just a matter of a government issued ID and an email address suffices, along with a selfie that you take within the app. But that is the whole idea of being able to achieve that financial inclusion objective, where persons, even though they may not be in the financial system with a bank account, credit union account, you can still access Dcash. So that was precisely why we did that. You may have kids, if you want to include kids as part of your ecosystem for Dcash, where some banks have restriction that you can only open a bank account if you're 18 or older. You have persons who are younger than that who may want to benefit from the whole Dcash. So that value-based wallet as well allows you to bring those on into the whole Dcash ecosystem. So yes, we do have that in place specifically for that purpose. But just to pick up what Scott said about access as well. We are looking as well at offline capabilities. We have the whole issue of natural disasters, but also in our region, even though we have almost 100% cell phone penetration, the Wi-Fi access is limited. So the cost of these wireless services as well, persons may have smart devices but don't have a data plan, so they rely on Wi-Fi access. So you may be in an area where data is available, but you don't have a data plan. So you still can't access the CBDC. So because of that, we do have to look at an alternative solution as to how can persons access the Dcash without needing internet access. And also in some areas, the internet access is not as strong as it can be. It's very sketchy. So that is a key area that we're looking into as we develop our Dcash further. How can we have offline capabilities, and also how can we facilitate those persons who may not have access to internet services to be able to transact in Dcash?
Thanks, Sharman. I mean, we'll come on to it, I'm sure, as the conversation continues, but at each turn we seem to hear different barriers, don't we? It may be I haven't got a bank account in the first place. Well, it seems like there's you've got kind of ways to overcome that. But if it's not that, it's I'm kind of offline permanently, or I'm regularly offline, and these kind of things. And again, it's interesting to hear from Scott. It's obvious, but this is not unique in all territories. There are places where that can be the case. Kimwood, can I come to you then, really, on that same question of the I don't know if there's a stat from the Bahamas on the percentage of unbanked and how the central bank is trying specifically to use CBDC there.
Yeah, we recognize that we call it somewhat of an underground economy, because we do have a portion of our inhabitants that are basically undocumented, and they do operate in the commercial space. They are collecting salaries, etc., and it's predominantly in cash. And because they're undocumented, most banks, regardless of the amount of money that you're holding, would require you to have some sort of KYC, some sort of national documentation in order to open up those accounts. And unfortunately, these individuals can't. And then we look at the risk factors of entire communities that are basically keeping their entire savings cash-based. You hear sometimes of entire communities going up in flames, and if these persons are keeping their cash under their mattresses instead of in the banks, there's no insurance on that cash, and so that's basically their entire life savings lost. And so giving them an opportunity, again, it's not discriminatory. you can open up these sand dollar wallets and hold cash directly into these wallets without any particular form of KYC. Again, like Shemaine pointed out, because there is higher risk for lack of KYC, we do have certain limits as to how much funds can be held in these wallets. We also pay more attention as well to the underbanked, because again, being an archipelago and understanding, while there was a time where these commercial banks were physically located, and as commercial activities took place, individuals, if I had a business, I got a significant amount of cash, I could deposit that cash into a bank. Today, we actually have persons that may actually have to get on a flight, fly into New Providence to go to one of the banks because there's no longer a satellite branch. They have to fly into the main branch here in New Providence to make the deposit. So when we think about, the impact on poverty, if it becomes more and more expensive to just operate a business, there's a possibility that that business has to downsize or even close, and that in itself can increase the poverty rate in the country, because cost is a direct impact on poverty. So as long as the cost of doing business continues to increase, and the activities around the way some of these commercial banks operate sort of feeds into that, we're sort of like the self-fulfilling prophecy of, if we do not create a solution, that now we actually have the ability to tie a sand dollar wallet directly to a bank account. Somebody operating in the commercial space can transact, have these funds collected in the CBDC, have the CBDC circulated right there in that same local economy, either through the way of paying their staff salaries in the CBDC, paying their vendors and other suppliers in the very same CBDC, and or converting the CBDC directly back into fiat through some sort of intermediary means like the ACH or the automated clearinghouse, transferring those funds into that commercial bank account here in New Providence, even though that person is in one of our remote islands. It's real time. So from a cash flow perspective, they don't have to wait 2 to 3 days for a check to clear or for the funds to actually settle. It's real-time settlement, going through ACH, that's also at least within 24 hours. So we see where these things sort of combat some of the problems that have been increasing through the actual downsizing of some of these commercial banks. And, again, like Scott pointed out, they're moving towards, and somewhat, I know the governor of the central bank mentioned that a part of why this is happening is somewhat because of customer habits. More persons are using online banking. Less persons are using physical cash. They're using debit cards and credit cards. And so the need for that particular branch to be there to service basically 20% of the actual customer base becomes now an expense to that bank. And they recognize that it would be prudent of them to consolidate, because there are less and less persons that actually require that brick and mortar. But you do have that small percentage that rely heavily on those type of services, and they're negatively impacted by the behavior patterns of the wider population. And so we tend to focus on that underbanked population and the impact that these commercial banks have had in that space, to make sure that the CBDC can definitely be a positive instrument that they can use to counteract. And again, the impact, the cost effect that actually increases, or the cost of doing business in a cash-based economy, where you do not have methods or easy methods by which those funds can be deposited for future use.
Thank you for that. I want to come on now to a question that we received in advance from someone who knew that the webinar was happening, and he's someone who's spoken at one of our CBDC events before, and it's almost kind of a yes and no question actually. And the question is: Are customers, our people, able to access CBDC via feature phones, which is the phrase he used? We were discussing before, and Kimwood, you said in the Bahamas at least, those type of phones are known at least locally as bubbler phones. But I think we're for the world, I think we're talking kind of mobile phone 1.0. So kind of basic phones. I think there's always an assumption in these discussions that people have kind of almost the latest smartphones, and there's a lot of discussions about kind of the latest kind of consumer apps and making a potential CBDC use very snazzy and the rest of it. But obviously there's those people who don't have mobile phones at all is an issue we've slightly already looked at. But what about those people for whatever reason who have very basic phones? Let's stick with you, Kimwood. Can you use the SAM dollar on a bubbler phone?
It is actually a yes and no answer, to be honest. It sort of then takes us into that world of the offline transaction. Because as we're looking at offline transactions and offline solutions, even though we sort of focus heavily on smartphones, we've also recognized that there's a significant amount of smartphones in the space that are low-end smartphones that do not actually have near-field communication built in. That NFC that allows for, point-to-point or face-to-face type transactions that take place offline. But as we are looking at that as an issue, one of the solutions that came out of that is there are actual chips that can actually be attached to the SIM. So once those phones actually have a SIM associated with them, the SIM itself can now operate as the NFC device. And so with that said, if we do look at that level of, or that solution, a particular solution, and again, it still is tied to offline transactions, there would be a possibility for those low-end cell phone 1.0s to be able to transact in that space. Now, I say that with a word of caution. There's still the need for the application itself. If the phone isn't smart enough to at least have that application built in, again, if this is a non-smartphone talking to another non-smartphone, I don't think it will be achievable, because you do still need to have some sort of machine language that actually interprets exactly what is taking place. There needs to be instructions put in, and somebody on the receiver on the other end needs to be able to translate that particular set of instructions. So while there are possibilities, I do believe we will find ourselves in a place where, and I'm hoping not too many of those phones are still in existence. I'm sure there are, but we will find ourselves in a place where there's a need to upgrade.
I think some things like fashion go full circle. I think there was a move about 12 months ago here in the UK. You were walking into mobile phone shops, and those older phones were back again, almost back, kind of slightly more modern versions, but almost back in fashion. Sharman, it's the same question. Let me just look for the question again. Simply, are people able to access, so for you, Dcash via feature phones or bubbler phones, if that phrase is where you are as well?
So currently, no. Currently, the Dcash as it currently is designed requires a smartphone. However, as we look down the road, in terms of future developments, and particularly the offline feature as well, that is one of the considerations. So I know, I think the Central Bank of Nigeria, and I think it's Ghana as well, they use the non-smartphones, and they use what they call the USSD feature. So currently, for our even for our telecommunications company here, you can use codes, enter 1, enter 2, and it takes you to the same steps. And so that is a consideration as well, where you can use these codes. So it's something that we have to look into as we move further, because of course, if you want to reach the entire population, you have to cater for these things. And the truth is, not everybody will be able to afford a high end or even the lowest end that works with Dcash in terms of the smart devices. So it is something that we are considering as we look at the medium to long-term plans for Dcash, where we're going, because it is important if we're going to achieve the financial inclusion objective that we're trying to achieve. So no, it's not currently available. It is not off the table, because we have to consider that as part of our roadmap towards achieving full financial inclusion.
Thank you for that. Scott, I'll come to you. Scott, do you have any kind of, obviously it's not a yes or no for you, because you're not live with a Canadian digital dollar, but do you want to come briefly on that? And then while Scott thinks about that, the next question I just want to come to, and we've kind of alluded to this a bit, is on this, in this panel, we're central bankers, and yet actually it's primarily government or entirely government policy that is focused on financial inclusion, whereas central banks' core mandate is to focus on kind of financial stability. So it's a question, I guess, for all three of you, is to the extent to which your, I suppose, more monetary and technologically focused priorities in terms of developing your digital currencies are coordinating with for example, the ministries of finance or whatever, but specifically with that financial inclusion imperative in mind. You sort of so I'll go to Scott first of all, just on if he wants to come in on the question we were looking at before, and then if I can go maybe back to Charmin to look at the interaction the central bank has with the government authorities. So Scott. Scott, I can't hear you. I think we've got an audio problem for Scott. So while Scott, do you want to have another go? Now? Yes, we can. Okay.
Okay. Sorry, just unmuted. Mute back again. So yeah, CBDC can be offered through multiple platforms, and we need to keep that in mind, especially if we have this goal of making sure everybody has access. Like M-Pesa works through SMS text. So it is feasible to do this sort of thing on feature phones. So we just need to figure out what the size of the population is that would need this service, and then make a decision on whether or not that's worthwhile offering. So we've done quite a bit of research trying to identify the different market segments that we need to think about in terms of access and how they would be accessing. So I think that's an important feature going forward, is just identifying all the different ways that people can access and would need to be able to access. On your other question with respect to the government, I think there needs to be close cooperation across the whole government. And we've only just started with that engagement, of course, but we need engagement with the Ministry of Finance, but also various other regulators and authorities in charge of privacy, data, various financial institutions and regulators, consumer protection. All of them need to have a view and be incorporated into a well-designed CBDC system.
Yeah, thanks, Scott. And just for the audience again, the Government of Canada or the Bank of Canada or both are set to consult in this year at some point. Is that?
We're currently doing a consultation, the Minister of Finance, on the digitalization of money. So that is covering stable coins, crypto, and CBDC. And that the consultation is ongoing. A report should be coming out within the next few months, and we'll see what the plan is that's announced for further steps after that.
Okay, thank you. So back to the Eastern Caribbean and Charmin, for the extent to which you've been working closely with the government, but with a focus on the financial inclusion priority.
Right, so we have been working very close with our governments. We actually have individual meetings because we have 8 governments that we're working with individually. What we have seen in recent times, particularly the governments are actually looking for alternatives and for solutions for digital payments, to increase the digital payments, because most of our governments still do payments whether by checks or, in some instances wire, but predominantly by checks. And so what we have seen is that we are trying to see how can we use Dcash to make it easier for them. And in terms of adoption as well, we have recognized that to drive adoption, if governments incorporate Dcash into the operation, it also drives adoption, because governments, they pay the most and they receive the most in taxes, etc. So we have been working very closely. We've had individual meetings. Some governments are more advanced than others in terms of digital transformation agenda. And so we work alongside them. We also look at the regulators as well, as Scott mentioned. Very early in the project, we met with all the regulators in terms of ensuring that what we were producing as a product would have met the requirements that they had for their non-bank. So for us, it's a very, very close relationship, and whatever we do ultimately has to be what they feel is needed and necessary to move their agenda as well. So not only the central bank's agenda, but also the government's, because for us, that is going to be a major push towards adoption of Zcash.
Yeah. Okay, thank you. And Kim, what about in the Bahamas working with? I think actually both the Eastern Caribbean and the Bahamas have already moved into kind of government use cases. I forget. I think is it the Bahamas? Both of you have talked about it. I forget who is already doing it. So I suppose that very much puts it in the government in the arms of the government to an extent as well. But Kimwood.
Yeah, correct. So we've already started rolling out some pilot programs with specific agencies, and more so when we talk about the cooperation with the government, they've been doing their own cashless initiative and some digitalization projects as well, trying to convert some of the agencies to find those efficiencies that come in from a reporting perspective, less leakage or corruption, etc. So there's a lot of benefits from going into a digital space and using digital money from a collections perspective. But we've also been talking about for disbursements. Again, when we think about the fact that there's a huge cost and security elements surrounding transportation of cash for thousands of miles across the ocean, as well as the accounting for these particular funds once they arrive at their destination to then further be broken down and distributed. But the cost benefits around being able to just, press a button and be able to distribute hundreds of thousands of dollars within seconds to multiple recipients all over the archipelago is a great advancement. What they've also been doing, they've been building out their own platform as well that they've integrated into the Sound Dollar space. And they're also working on a national ID program. And so through all of these different channels, we're looking to get that level of cohesion and some synergies. But most importantly, the cost of doing a lot of what we want to do and recognizing what are some of the roadblocks, such as communication. So we've asked for the ISPs to whitelist all of the digital wallet that's provided that carry the Sound Dollar, so that persons, if they are in an area that has that don't have Wi-Fi but they do have data, that that particular individual doesn't have data on their device, they should still be able to transact because the ISP will allow those transactions to flow through whether that person has data or not. So we've been in discussions with the internet service providers to whitelist all of those applications that conduct transactions. We've also been asking the government to bear the cost of expanding open Wi-Fi areas in commercial districts in some of the more rural areas. So putting in hotspots, putting in VSAT networks where there are a lot of transactions taking place. So while you may say, well, I may be living somewhere that doesn't really have a lot of internet access, but I'm not really doing a lot of transactions where I am living. But when I go into the city center, if those city centers now become, basically communication hubs that offer free Wi-Fi to everybody within a particular commercial district, that cost is absorbed by the government just for the sole purpose of making sure. And again, you can make sure persons on those websites on those hotspots on YouTube watching videos and just eating up bandwidth, but they can be designed specifically for transaction based activity. So these are discussions and these are plans that we're trying to push through with the assistance of the government themselves and the Ministry of Finance, our IRCA and other ISPs and other stakeholders in the technology and communication space as well. To make sure that once the entire ecosystem continues to be built and rolled out, we look at the technical and the physical aspects of it as well, and the assistance that the central bank would need directly from the local governments, the Chamber of Commerce, and identifying where those particular locations are, where those hotspots should be located, which areas have the most commerce, et cetera, et cetera. So those are all aspects that we take into account to make sure that the government goes hand in hand, not just from a perspective of the movement of the cash, but making sure that the physical infrastructure is in place as well, especially in those rural areas where you may find there's, blackouts or dark spots where there's no internet access, no Wi-Fi, etc.
Kimwood, thanks. It's clearly very integrated, isn't it? With this, not sometimes you think one thinks of these CBDC projects as sometimes operating a little bit in isolation, but it's fascinating to hear how it's moving, in tandem with other kind of digital kind of modernization initiatives. And we're pretty much out of time. So before I just kind of ask for kind of closing remarks, and if anyone kind of has anything they'd like to summarize from what we've kind of learned so far. Sharman, I just wanted to come to you because I couldn't resist asking this question, which is that if I'm right, you've been at the ECCB for more than 20 years, if that's correct. So my pre-rehearsed
That's correct, 26 years.
26. Scott, I think you've also been at the Bank of Canada for quite a period.
30 years.
Congratulations as well. But I think this, it could apply to both of you, but given that Dcash is live, I suppose I'll go to Sharman first, which is where do you think the ambition and scale and challenge of introducing a CBDC compares to the others you faced in 26 years? Because you've you've lived and breathed Dcash for the last few years a little bit. Where does it I'm interested for you to reflect, probably outside of the financial inclusion lens, but how the project has been.
I think it's probably one of the most challenging projects that we've embarked on, simply because the whole issue of change. I think persons are very resistant to change, despite the fact that the whole digital economy is moving ahead. I think persons are still very cautious. So where you think persons would readily accept it because they're into digital transformation, it's still a challenge and persons are still skeptical about it. And the whole issue of cryptocurrency versus CBDCs and the confusion there and all that's happened, even now what's happening in the crypto space, persons are going to have become gun shy again because they're like, okay, is this really safe? You have those persons who want to feel the money, they want to feel those dollars in their hands. They're accustomed to that feel of the cash. So I think it has been a challenge, but I think it provided us a very good opportunity though for persons to learn more about what the central bank does and really understand. So I think it's two sides. It is very challenging, but I think it is something that has helped us to become more visible and for persons to understand better the central bank and the role that the central bank plays in the economy. So for us, we continue to be challenged by it. COVID did not help. It made it to a wrench in some of the things that we had planned. But I think the lessons we've learned today though will propel us now in the next phase where we are trying now to really push for the habitual use of Dcash and really cementing its place in the economy. So I would say it's a worthwhile challenge. It has been a worthwhile challenge and continues to be.
Thank you for that. So a really nice kind of, I can maybe even take that from your kind of closing comment, unless there was anything else you wanted to. I mean, I could ask a something different question, which is if for the audience kind of watching this who are going to be interested in the title, how can a CBDC help with poverty? Is there any, maybe we've touched on so many different topics, the type of phone, online, offline functionality. We haven't been through this before, but is that kind of one overall tip you would say, make sure you do this, or I guess you've summarized that view already, but any kind of
I would just say that globally digital transformation is happening. I mean, everything is going digital, and so persons need to not be left behind. And I think the CBDC, the Dcash, is the first step to that. Because one of the things that we found is that even though we have other wallet providers out there, they are still hoping that by using a CBDC, which is a central bank, persons have confidence in the central bank. So they're still hoping that would help persons to propel to use even other digital wallets. I think for persons to remain relevant, just as the central bank needs to remain relevant, we need to continue on this path and really support the launch of the CBDC.
Thank you for that. Scott, I'll come to you then. It's unfair to ask where CBDC, the same question. I guess you get the spirit of the question, even though it doesn't, given that your Bank of Canada is not live with a CBDC. So where does CBDC sit in the context of your 30 years with the Bank of Canada, but also any kind of closing closing remarks for given the title, how can CBDCs help with poverty?
I think CBDC, central banking is about change. The economy's been changing quite rapidly for a long time, and central banks have had to change with it. But I think that CBDC is probably the biggest change potentially facing central banks, because it really does come down to a core question of what is money. And that's something very fundamental to central banking. So I think it's some of the biggest change potentially that we've ever faced. On the question of the topic of this panel, I think that the main lesson is include everyone. That's a large part of many discussions these days, and it applies just as well to CBDC. We need to make sure that everyone is included in the economy, and that we do it in a way that a CBDC can help promote even more inclusion, so that we include businesses, merchants, financial institutions, and build a platform upon which others can offer greater services, more higher end services, so that it's a whole ecosystem and not just the basic payments. But we have to make sure the basic payments are done very well and in such a way that includes everyone.
Great, thank you. And Timwood, the final word, I guess, to you. I don't think you've been at the Central Bank of Bahamas for 26 or 30 years, but how long have you been at the Central Bank of Bahamas?
I've been here a little over 2 years.
A little over 2, and you, almost fully focused on the sand dollar, I guess. And
Yes, primarily, yes.
Okay, so I guess kind of a closing comment, if you'd like, on yeah, kind of reflecting the title really. So how the project has overall been, and one, if there was one message you would like to share with those who are interested in CBDCs from a financial inclusion perspective, what, if probably unfair to pick one, but if I could put you on the spot and try and pick one message for those watching, what would it be?
Well, I think when you talk about the aspect of inclusion, and a lot of people just constantly focus on the actual end user. I think Scott sort of touched on it. When we talk about financial inclusion, you have to look at all of the major stakeholders that create the ecosystem. Even in our implementation strategic plans, we look at entire industries. We look at the touch points. We talk about the money flowing in and out of the economy itself, where there's actual circulation. So we think about every touch point of a physical dollar bill, and you have to see, how can this be converted into a digital currency? How can this become a digital token? And to see whether or not, you know, this technology lend itself to this particular environment. Does the infrastructure lend itself to this particular environment? Is the knowledge and the education and the exposure, the target audience? And so you pay attention to all of these things, and you can't just have a broad brush and use broad strokes to try to apply this to every particular scenario. And this is not a one-size-fits-all solution. So we have to take into account, you know, who are the major players, who is going to benefit the most. Not all things will not be equal in a CBDC environment. There are going to be persons, and again, this is why we see developing nations pursue CBDCs a lot more and a lot faster than developed nations, because, you know, we have a greater need. We have seen, you know, some of the impact of, you know, bank closures, et cetera, and the lack of electronic transactions or an alternative to physical cash, and the impact of not being able to operate in that physical cash space. So we need to take into account all of these aspects and approach the implementation from a point whereby you're not trying to take on too much at one time. Set realistic goals and ensure that as you build the ecosystem, you look at all of the areas where there's going to be bottlenecks, where you're going to find roadblocks, and you try to deal with them ahead of trying to push forward and get a better understanding as to the psychological makeup of the individuals. You know, what is their trust factor for financial institutions as a whole, even before you start to think about their trust for digital payments. And so I think once you have all of those things captured, and nice and neatly documented and can break it all down, it'll make your job a lot easier.
Great, thank you very much. Well, good luck to the Sand Dollar and Dcash with its continued evolution, and thank you all for your time watching. We're out of time. We're going to be publishing a write-up, so to ensure you receive this and our ongoing editorial content on topics, including CBDCs and more, sign up to receive our weekly email newsletter. You can find a button on the Global Government FinTech website to do that. We also encourage you to join our community on LinkedIn. We're easy to find, just type in Global Government FinTech. But thank you again then to Kim Wood, Charmin and Scott, and have a good day. Thank you for watching.